I hope you guys are all feeling good because this is where all the magic's happening. So we are, on the precipice of this massive change, and as we've discussing, in the faces of those challenges, the leaders rise, right? So we are here to forge that conversation now, and the next one is on a lot of people's minds. It's a topic of regulation. I actually just did a Twitter Spaces on this because it's so interesting for me to be able to interact with the corporate side and the institutional side and people who must have that regulation to operate versus the crypto pirates, right, that are on the other side that are championing these ideals that we have of freedom, of digital ownership, of being able to take accountability for ourselves. A lot of people are worried that maybe this regulation is going to try to tell people that they don't know how to govern themselves, that they aren't smart enough to be able to figure that out. But that's not what this is. Right now, we're in the middle of a battle, of a war of sorts. And the best way forward for this whole industry is that we merge together and have that conversation together and talk with the regulators and discuss that in a meaningful way so that we can come up with regulation that doesn't stifle innovation, that allows clarity to those who need it to get involved, and bridges the two worlds. That's what we need. As Charles Hoskinson said in our spaces, it's either change or die. So in this next panel, we will be discussing topics of regulation, which is on everybody's mind, in the crypto's institutional Game of Thrones, outmaneuvering barriers and regulations for the next big move. I'd like to welcome to the stage our speakers, Lukas, the CEO of Bitpanda Technology Solutions, Cyril, CEO of Lydia, Kevin, CEO of Keyrock, and Alexander, Head of Strategy DWS, moderated by David from Leadblock Partners and founding partner. Big round of applause for our next panel, please.
Hello, everyone. Thank you for being here. It's good to see some few familiar faces as well. But without waiting, I'm excited to have such a great list of panelists today, from pure crypto to TradFi as well. So just going for a few introductions. So my name is David Chreng. I'm one of the founders of Leadblock Partners, and we are a venture capital firm investing in Web3 since 2018. And I'll let every single of the panelists introduce themselves, starting from Cyril.
Hi, I'm Cyril Chiche, the co-founder and CEO at Lydia. Lydia is a French mobile bank, if you want it, that is really focusing on the younger demographics. And we introduced crypto trading with Bitpanda a little bit more than 2 years ago now.
Hello everyone, my name is Kevin. I'm the co-founder and CEO of Keyrock. So Keyrock, we're a crypto digital assets market maker based off Belgium, active worldwide for the last 5 years.
Hi, I'm Alex Bechtel. I'm the head of digital strategy at DWS. DWS is the asset manager of Deutsche Bank, one of the biggest asset managers in Europe, and I guess I'm the TradFi guy here today on the panel.
You're definitely the TradFi guy here, I would say. Hi, my name is Lukas from Bitpanda Technology Solutions. I'm CEO there, and we are enabling fintechs and banks to offer crypto and other asset classes. And with Lydia, as said, we're already 2 years now live and enabling French citizens and residents to trade crypto.
So I mean, to start off, especially if there's French domiciled people, so you must have I'm sure the application of Lydia, but Cyril, Lukas, it would be great to hear from you guys, at least from Cyril. What was the genesis of that idea of bringing crypto, to your users initially, and how is it going today?
Well, I have to say that the overall idea was to bring more than crypto, entire new feature to Lydia users, which was the possibility to trade listed assets from stocks to ETF to precious metals to crypto in a fashion that has never been seen before, i.e. as liquid as cash. So you have money on your Lydia balance, 5 seconds later you have a fraction of whatever you want to buy, and 10 minutes later with that 10 euro you got a menu at McDonald's. So that was the entire idea. So we built that crypto trading capability as part of giving people freedom to access to listed assets in whatever category they want, with the freedom of being completely independent from market opening, closing, having an investment account, not having, I mean, removing all the frictions. And I have to say, it started okay, and we put together a very solid media campaign, the biggest advertising campaign that Lydia ever did. We're not a very big marketing company. A little more than 3 million, I guess, overall euros. And we had these beautiful posters made by incredible artists. Actually, we're very proud that these big posters are now in the collection of the Museum of Art Decorative, so you can see them in the collection at the moment. But all this big campaign with TV ad and everything was released the day Terra unpegged. And
perfect timing.
Perfect timing, like it was amazing timing. So it was like, wow. So we're super happy that they have them in the collection now. But it was a big disaster. And what the entire thing was really, we want to empower people to start trading. And we've seen that we did that with a few 100,000 of people, thanks to the capability built together with Bitpanda. And we had incredible feedback from users on the capability. I wouldn't tell you that we had the peak of the trading at the moment, but we definitely keep on investing in the feature because we believe that it's going to be one of the key features for Lydia in the future. And yes, like a few 100,000 people are using us to do that.
And just like circling back with Lukas, so Bitpanda has been around for a decade already, pure crypto initially. Lydia has been there also for almost the same time, initially pure fiat. How has been the relationship between you two since the partnership started?
Also from my perspective, very good, to be completely honest. I think it's not normal that we sit there that far away, I would say. Cyril and myself are like quite near. No, I think the interesting topic, actually, what we've seen, or what we also currently see in the market, right, is that players like Lydia already 2 years ago, very early, but especially in the last 12 months, even that we are in a crypto winter, in a negative market sentiment, that a lot of players, and these are fintechs still, challenger banks, online platforms, but also traditional banks. This happens here in France, this happens also in other countries in Europe, are more and more interested in how can they enable crypto as well as also tokenized assets for their customers, for their retail users, but also for their corporate clients. So this is broad and I think also supported strongly by the upcoming regulatory framework in Europe, MiCA. But also on the other side, simply finally banks decided or understood in Europe that crypto is here to stay, and everybody's not thinking about if they want to do something, but everyone is thinking about what and how they're going to do that. And that's, I think, the big shift we've seen in the last 6 months, especially across on the whole continental European countries. Yeah.
So I mean, we've seen that effectively, retail have been having easier access to crypto. Now switching the mic to Alex. DWS, as you mentioned, is one of the biggest asset managers in the world, close to 1 trillion in assets. As more retail get access to crypto and more institutions also get access to crypto, what role do you think, or would you like DWS to play within that ecosystem?
Yeah, so we are usually splitting up the, let's say, digital asset world into 3 verticals, right? We're looking at tokenized assets. That's one vertical, which includes tokenized stock, bonds, tokenized real estate, even tokenized intangible assets, you name it. Then we have the second vertical, which is tokenized money, which is stable coins, maybe central bank digital currency, tokenized deposits. And then the third vertical is cryptocurrencies. And when you kind of look of where these three verticals are today and how big they are, it's usually all about crypto today. So the crypto market is a bit more than 1,000 billion in market cap. Compared to the other two, I think tokenized money is maybe 130 billion, and tokenized assets, it's super small. It's only proof of concept, no secondary trading, and so on. So for us, it's usually we say, if you want to enter this world, we should enter into this crypto vertical first. And this is also where we see tangible client demand. And based on that, we have started a couple of weeks ago. We've entered into a strategic alliance with Galaxy Digital, big US or global player in the digital asset space, as many of you know, I'm sure. And we are going to issue crypto ETCs in the near future together with Galaxy. And that's, we are not the first one, yes, that issues crypto ETCs in Europe, but I think it's quite significant if one of the big traditional asset managers actually teams up with a big US player and kind of opens up to the digital asset and crypto world. So I would say a bit in the line with what Lukas has said. We are opening up, and in the medium to long term, going back to kind of our strategy and how we look at that, this digital asset and digital money vertical is what has a huge potential, right? So even though it's today super small, I think globally, that's a number from McKinsey, we have 1,500 trillion market cap in assets globally. If only a tiny fraction of these assets will ever be tokenized, let's say 1 or 2%, we are already talking about a market that's 1 or 2 orders of magnitudes bigger than the crypto market. And that's, of course, also very interesting for us as a traditional player. And this is why we are also looking into this tokenized money and tokenized asset vertical by being very engaged when it comes to stable coins. So something like we could be the reserve manager for a stable coin, but also tokenized assets. We are kind of trying tokenizing funds, for instance, thinking about a broader tokenization strategy as well.
And just to bounce back on this quickly, out of the three verticals you mentioned, which one at the moment is a bit more top of mind for you?
So before I went to DWS, I worked at Deutsche Bank, and I was also in strategy responsible for digital assets, and I was there a bit more than 2 years. And during these 2 years, not a single person, not a single client contacted me asking me if I could tokenize a piece of real estate or a stock, right? But a lot of clients asked when Deutsche Bank will finally offer crypto trading. That's just where the client demand is today. And the good thing for the traditional financial institutions is the tech stack and the capabilities you need to build up in order to offer products around crypto and products around digital assets. It's pretty similar, if not the same in many cases, right? So for us, it's building up that tech stack, building up these capabilities, first starting to offer products on crypto, because this is where the music plays, and over the medium to long run, hopefully moving more and more into these digital money, digital asset verticals.
Great. So we've seen basically starting from the retail side, facilitated by Lydia, Bitpanda. You got the institutional side with what Alex has mentioned. You got the infrastructure that connects everything together. Now the question is, without liquidity providers or market makers, we wouldn't be able to trade anything. So, Kevin, you've been there since 2017. You've seen a shit market, a better market, and I don't know how to name the credit market. So I'm just wondering, what do you think is different today? What you're afraid of, and where do you think the opportunity lies?
Yeah, I think there was actually a few more cycles than that still, between good and bad and good and bad. I think interestingly, some of the narratives are still the same today, in the fact that the big potential is not just crypto, but digital assets, all types of digital assets. I guess McKinsey cannot afford to be completely wrong, so they're going to say a few percent. I personally can afford to be extremely biased, so I'm going to say it's going to be a lot more than a few percent that will eventually be digital, because it's simply a better way to exchange value. So the narrative has been the same, honestly. The big talk of the town at Consensus 2018 was Polymath, that was tokenizing everything, but it was going to take some time. And so I think the narrative is the same, but the difference is that we are much further along in the development. And the most striking difference at the same part of the cycle that we're at now versus 4 years ago or 5 years ago is who's staying. I think, again, 2018, everybody was talking about Goldman Sachs launching their crypto trading desk. And we were just launching a small market maker in Belgium and say, guys, you're toast. It's over. These guys are coming in, you are done. And of course, that's, I guess, asked me to talk about my fear, those were part of my fears back then. I was like, they're coming, we're done. But the reality is that market moved afterwards, and 6 months later, they were gone. They just shut it completely off and never to be seen again in crypto for the next 2.5 years. Now, the market is somewhat as bad, but these players don't leave anymore. Because yes, there are doubts about how things are going to pan out. There are doubts about regulatory frameworks. Luckily, in Europe, there are less and less doubts. We have a bit of a foot in the door with MiCA, so a bit of clarity. But there is no doubt anymore on the fact that it is a better way to exchange value, that cryptos, for all their flows, have proven it, have shown the retail interest in it because it is easier to trade, easier to exchange than anything traditional. And so there's no more doubts about the destination. There are doubts how to get there, but that means that these players are staying. I mean, we have DWS here on the panel today. They would not have been there probably, in the previous cycle. And it's the same for every traditional players. They are still there, very active. We see it today. We have banks that asked to onboard with us on the OTC side. They were the ones that didn't want to open us an account 4 years ago. So very clearly, there's a difference.
I mean, and also like it goes through, I guess, education, putting more framework, around the table. Like one very hot topic at the moment, of course, I'm sure as all of you are aware, is what's happening in the US with the SEC crackdown. And I mean, thankfully, we have 4 different, vertical within, traditional market, but also crypto. Like, there's a situation today. There are facts about the SEC cracking down, a big chunk of the industry. Asia is also opening up. Europe, as MiCA pushed forward. The question now is, according to every single of you, what role should we play? Because as market participants and market leaders in the space, you also have a responsibility in educating the regulators, the governments, companies around. So how do you think about this? Like starting from Cyril, maybe.
Well, I guess you say that we can't operate without a clear regulatory framework. It's too dangerous. It's too dangerous from many sides. It's too dangerous from retail clientele perspective. Like you don't know if it's going to be there or not. So if you have that kind of problem of trust, you can't attract the real mass of people. You have problem with investors because if they don't know if you're going to be cracked down or not, then it's more difficult to attract investment. You got problem with, everyone. So we really need a regulatory framework that is as clear as possible. But of course, we want also to have a regulatory framework that is agile, that makes sense, that is not based on things of the past that have been applied poorly to things that they don't apply to. So what's really important is really to have a lot of exchange and educate the regulators, because believe me, we've been through a lot of cycles with regulators on payments, which has been through a lot of regulation over the last 10 years. And the regulators are, yes, rigid people. They know what they know, and they've been here, and they have the power and everything. But they're also very open-minded and smart people. And if you actually, in a constructive discussion with them, you can, you can basically make them understand better what's happening and make better educated decisions. And that's what we need. And we definitely need Europe to take the lead on that, because it's not what we see happening elsewhere. So clarity and constant discussion with the regulator, I believe, is the best that can happen to us.
Kevin, on the market making liquidity provider side?
Yeah, I think it's not, I'd like to add something on that is not directly linked actually to just market making, but I think that more broadly, as actors being active in crypto, we have a responsibility to focus on what matters. And that's something that sometimes gets lost, in this market. When you look at crypto Twitter, and everybody talks about what, you talk about Pepe, you talk about some other things that eventually don't matter. It's fun, it goes up, everybody talks about it, but that's not the value that this market and this technology is creating. And so I think that by continuously hammering down that message, continuously focusing on why this technology is actually interesting, why are we actually trying to make it easier for everybody to invest, why are we trying to take barriers down towards financial empowerment, financial freedom everywhere in the world, and not focusing only on trading Pepe with 100x leverage in Europe. I think that this is part of the responsibility as well, because it is also what would eventually bring the message home. towards the regulators that no, this is not just a giant online casino. There are reasons why it is better for all market participants. And the ones that have the responsibility to show it are the ones that have that conviction for the longest time, right? And so I think it's really part of the market responsibility to keep the focus on what matters and not only on the flashy thing that comes with every cycle.
Alex?
So, I mean, what's currently happening in the US, you can say it's good and at the same time bad. And I often hear the argument, you know, now in the US that it's a mess, everyone is going to come to Europe, which is partially true, I believe. And we already realize that we get kind of inflow from the US. And I think even here in Paris and France, I mean, just need to congratulate you guys here. You're really kind of building up that fintech hub here. I envy you a bit for that, to be honest, from a German perspective. And we are always engaging with BaFin, so the German regulator, saying, you know, you guys, look what's happening in France. We need to be faster in Germany. And Lukas, I'm sure you are able to talk to that. Getting a license in Germany, it takes time. You know,
Alex and Lukas, you're both moving to Paris, right?
Yeah, exactly.
Yeah, probably.
So, but I would say on a net basis, it's not positive what's happening currently in the US, because we can't be happy that the SEC is like doing what it's doing. Just to giving you a very concrete example, I mean, also for us as a big traditional player, we need, of course, a lot of partners from the crypto digital asset space. Galaxy is one example, and we are lucky that they are kind of currently not in the focus of the SEC. But we also need, for instance, crypto custodians, right? I've been talking about the ETCs that we are about to issue. It's extremely difficult to convince our internal control functions that a company that's currently sued by the SEC would actually be a good crypto custodian for us, right? So, in particular for Coinbase now, using this as an example, it's a mess, right? They are going to have problems working together with these big traditional financial institutions in the coming months and years, not because they are a bad company, and it's not me to judge, but let's assume not because they have done anything wrong, but just because they are in this process with the SEC at the moment.
Coinbase is dropped by 10% after Alex mentioned that use. Yes.
Just to piggyback on that, right? I think first of all, also to state one clear topic here is it's one of the few moments, I would say, where we as Europe, and especially large countries as France, are at the forefront of regulatory innovation compared to other markets and especially compared to the US, which is a competitive advantage, hopefully for sure in the long term. However, still the US and the current situation over there from a regulatory not clearance and guidance perspective is just affecting the whole market. We have seen volumes dropping from a US volume perspective much lower, so the overall volumes traded in the US from the crypto market are declining, so you also see less trading activity there and now suddenly somewhere else, which is not positive for a whole market. However, I think we can just say to do the best out of that, especially as Europeans, to drive innovation on our continent even further, to ensure that we get a very good regulatory and solid framework now with MiCA in, and on the other side ensure that the large markets in Europe, France for example, but also Germany, actually will stick to a very harmonized framework in that regards, because that's, I think, the most important topic here.
I mean, just you mentioned the need to educate. I think that part of that is the need to challenge as well. Personally, I'm extremely happy about MiCA. I think it's an amazing first step, but it's important to keep in mind that it's just a first step. And the same way that if you look at anti-money laundering regulation, we are AMLD5 going to our AMLD6. We have MiCA 1 that is not even live yet, and they're already working on MiCA 2, right? Because there is a need to continually catch up with an innovation that goes 10 times faster than any regulatory process. And so I think that, yes, we need to rejoice and recognize the opportunity, because it clearly is one, but also keep on challenging so that we continue to just to keep up with the speed of the innovation on the market.
And also, just one point, I mean, you can hear sometimes that regulation is going to kill the business. We need to remind that the traditional financial system and the investment world is so much bigger than the crypto world today, and it's so much more regulated. So it's actually not killing the business, it's actually increasing the trust, and therefore it's multiplying by 100x the size of the pie. So it's really important that we get that as soon as possible in the best possible terms.
Actually, I mean, Cyril, because I mean, you've been through on the payment side, on the fintech side as well, and neobank have been under the radar of the regulator for some time as well. What did you see, throughout your journey for the past 10 years that you knew that there was a catalyst in terms of behavior, market sentiment, I don't know, banks discussion. Like, what was it in terms of combination of factors that told you're on the right path to push that forward effectively?
You mean from business perspective?
From a business point of view on the neobank side.
We're not bankers from background. Neither Antoine, my other co-founder, and myself. So we didn't know anything about that business when we started. All we wanted to do is an app, because it was a long time ago, and that's when Apple opened the App Store, where people could pay for everything with their phone, and that will be incredibly simple to use. I.e., you don't have to understand how banks work to actually enjoy your money, because that's so IT from the 90s. Today, all of you know what an IBAN is, right? Who doesn't know what an IBAN is? Okay, cool. The bad news is you should have never heard that name. It should be for banking IT people only. It's the unique identifier of the interbanking system. What the fuck? Why do you care? All you want to do is actually send money to Lukas or David for what it's worth, and you don't care about how it works in the background. So what we did is an interface with just a sentence with holes in it, and it's like fill the gap sentence. So if you can read, you can use. And that we've been using that same interface for everything. No, you're super happy with that, like super great UX. Eventually you will win UX contest, but it doesn't mean people will like it and will adopt it. So the way we knew we got it is when, for the first time, we had someone said, I'm going to Lydia you money. And that was pretty early on. Actually, at the time, that person believed we were like a global company, blah, 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 but we were like 10 of us in Paris, 50,000 customers. And now at that moment, we knew we have found something that would be really a product market fit. And we kept on building on that. And Friday night, I heard someone said, do you know what being Lydia means? And I'm like, being Lydia? She said, yeah, it's about situations. If this Lydia or this not Lydia, like riding at two people on an electric scooter, that's so Lydia. And I'm like, wow, I never heard of any brand that people are talking about, like, are you Chanel or are you not Chanel? Is this Google or is this not Google? So this is the love of the customers, and how they adopt the brand says a lot about how you're in the right direction, and that's what drives us. So we talk with our users all the time, like at least 100 interviews every day.
I mean, like at Bitpanda, do you have something similar as well in terms of the moment where, because 10 years ago, crypto was very extremely small in terms of number of users, in terms of knowledge around it, and we've seen many cycles happening. You're still there. You don't have much gray hair, which means that you live through it. But but in terms of after this cycle, and then we'll turn to Alex as well to get the same view on institutions. But what have you seen that has been a bit different from users' behavior, or even on the street when you speak to your friends, to relatives, in terms of how educated, how familiar they are with crypto?
Sure. So first of all, I definitely look much older than I looked 10 years ago, but that's a different topic. I think what we definitely see, not just in user behavior, but also across the market, is besides institutions this time staying in the market and building also offerings, is also that retail actually is staying, right? I think after 2017 and early 2018, a lot were saying, the bubble bust, the market is dead, and never ever crypto again. This time, a lot of people, and we see that also, so we also talk to our customers on the retail side a lot, but also to others. What we see is that the awareness of crypto is an interesting asset class backed by technology, by a technological revolution with a blockchain, that a lot of people are much more for the long term in, and are simply saying, okay, yeah, now it's down, but let's see how this will work out in the future. So much less people are dooming the world and that crypto will be banned and then it's gone, right? I think that's the big difference compared to the 2018 cycle, from my perspective especially.
And Alex, you were also at DB before, and you've seen, the narrative internally grow. Now you're at DWS. How has behavior of people, or at least belief interest has evolved from 4 or 5 years ago to actually today in the same market conditions in terms of how bearish it is?
Yeah. So I'm not going to lie, the last 1 or 2 years have been tough, right? I mean, it hurts, and it's definitely the case that client demand decreases. And usually, I mean, it's not a surprise that the Bitcoin price or crypto prices and the kind of client demand and deal flow we get is extremely highly correlated. So it feels like a crypto winter, also for us. And I mean, and that's not only true for startups, but let's say also the digital asset teams within big traditional financial institutions. For them, it's anyway an uphill battle, but when the market doesn't thrive, it's even harder. So I mean, I'm responsible for the digital strategy overall, which includes crypto, but there's other stuff. And believe me, the newest kid on the block is AI. No one wants to talk about crypto with me at the moment. Everyone wants to talk about AI. And that's just something, that we realize as well. Now, I'm very lucky that I work under a CEO, namely Stefan Hoops, who has fully understood and is extremely supportive when it comes to blockchain and digital assets. So what we have done is we have defined a couple of core beliefs, like stuff like crypto is not going to disappear in the future, the financial economy will be tokenized. I mean, everyone here would agree, but I think for us that was actually a huge step to agree on these things, because we can now take these core beliefs and say, we have agreed on that. Nothing has changed in the last 6 to 12 months. Materially, right? The technology is still the same, it's just less client demand. We still believe in this fundamentally, so let's act in accordance to these beliefs, right? And that's what we are doing. We have not reduced any of our budget when it comes to crypto and digital assets, quite the opposite actually. I think I'm very lucky that I'm in such a position, because I see, and you have mentioned Goldman, and others who are actually reducing their budgets, but there are still those who keep...
Stop talking about my ex-firm.
who keep fighting. And one last sentence, I'm convinced, I'm deeply convinced that those who are brave enough to invest now and build during the crypto winter will be those that are rewarded during the next summer.
I mean, I think I feel nicely to Kevin. I mean, you've waited until Terra, Luna crash, Celsius, BlockFi, everything to close your mammoth round, and you're continuing to build. Institutional flow is the next big thing. Can you share a bit more your perspective on how you're thinking about building the next railway so that you can accommodate 20 billion volume from Alex?
So we're good. No, I mean, I think that the story of our round of financing is interesting, because we closed in October. Indeed, the market was not perfect, far from it. It was a bit before FTX, but after all the rest. And I think the reason that was possible is, and I think for me is the key to, I guess, long-term success in crypto and digital assets actually, is what you focus on. And do you focus on optimizing for the next year or the year after that? Or do you actually, as Alex just said, have some core belief into why this matters? You focus for the next 10 years, and everything that happens in the meantime, you just don't care about it. So SEC, of course, everything that's happening now, it's a setback, right? FTX, Terra Luna, all setbacks for sure. But at the end of the day, it doesn't change the value proposition. So it doesn't matter. And that's really what the approach that we've taken at Keyrock. I don't try to optimize our revenue for 23, for our revenues for 24. What I want to optimize is how big we're going to be when eventually this entire economy will be fully digital, and we want to play a pivotal role there. And I think that it is really this mentality that, to some extent, assures my sanity when the market is like this, but it is also what made, I think, raising this round possible, and what will eventually make sure that we reap the rewards of our work now, when eventually indeed we get those 20 billion flow coming in, because all institutions will be active on digital markets, because all markets will be digital. And the very reason why this will be the case, that is not just a political conviction of an unbounded love for decentralization for the sake of it. It simply makes more economical sense. And as long as you have this long-term conviction, I think that you can deal with the short-term ups and downs, because they are just setbacks.
I mean, last year, and then I'm going to open up to questions. Lukas, I mean, again, you're operating, a broker's platform that, connects retails, but now you're also tapping into more traditional organization, not only neobanks, but also traditional banks. How has been, the process of educating and then converting them into actual customers? Because you onboarded recently a pretty historical financial institution, which was a massive win. So I'm sure people would love to hear more about that.
Sure. Thank you very much, David. Just that everybody's aware of, we're talking about a large community bank from Austria and the Central Eastern European region called Raiffeisen, very traditional 200-year-old banking group, which decided now also to offer in the midterm their customers on the retail side and on the private banking side crypto assets. Due to exactly what you said, Alex, the client demand they also experienced there. I think the important topic, if we look on more traditional financial institutions and banks, is that the expertise is not everywhere that high as probably now at DWS with you guys. They simply have no expertise, they have mostly no teams, and it doesn't matter if it's a small tier 2, tier 3 bank or if it's even the large tier 1 banks. That's quite new to all of them. However, everyone will realize that crypto is here to stay. And I think that's the main aspect actually. So for them it's about where to get the expertise from. They also don't have the licenses in the current market sentiment, as the current crypto licenses and also the upcoming MiCA regulation is for the first time under European banking regulation a license which also full-blown banks need to apply extra additionally for, which is nothing they can get granted just instantly. And therefore, they all need also to, from a regulatory perspective, to think about that. How to counter compliance topics, how to counter AML topics, and how to actually, from an internal control function perspective, set this up. And these are all discussions which you experience suddenly when you are working with these traditional players. And there I think, honestly, it helps very much that we are in the space since now 10 years, are fully licensed here in France by the AMF or in Germany by BaFin, and can speak their language when it comes to that point. So it's super interesting, but it's a lot of education. And sometimes it feels a little bit that conversations we had with regulators over the last 3 to 7 years, you now have with the compliance people in the bank. But yeah.
Amazing. I'm just going to open up the question to the floor. So if anybody has any question for those 4 panelists, please raise your hand, and then I think we'll bring you a mic. No questions?
Everything was super clear.
Exactly. Let's call it efficiency.
Also boring.
Okay. Amazing. Well, I would love to thank the set of panelists, and please join me in cheering and applauding those great guys. Thank you.
Thank you.